Investing is probably one of the best things you can do for your life. So starting off young is the greatest way to start. Hi, I'm Kevin Castaneda, and this is Kev's Mindset, where we talk everything finance, investing, mindset, and productivity. And in this video, we're going to be talking about starting to invest and why it's such a crucial step for your financial independence to start doing it as soon as possible. So we're going to be going over the best ways you can start to invest, my favorite brokerages, how to start, if you're under 18, how you can start. We're going to be going over kind of a full picture look on starting to invest. So if you do enjoy this video, go ahead and smash that like button, as I very much appreciate it. Also, go ahead and subscribe if you do want to watch more of my content in the future. Okay, so starting to invest is actually quite simple. Now, it seems very scary because you hear stocks and you hear the market and you hear inflation and interest rates and you hear all these different terms and all these different things that maybe if you haven't started, you don't really know and you're not familiar with. So it kind of pushes you away. It scares you off because you don't really know how these things work. But it's honestly very simple. Now, starting to invest is honestly a step-by-step process. All you need to do is first off have some money or capital that you want to invest. Now, this can't be money that you're going to need next week. Make sure of that. If it's money that you're going to need next week, then it cannot be money that is invested. So any money that is not used for your needs, you can invest basically, because other than your needs is whatever you want to buy. Let's say it's clothing or just random things that you want to buy. So starting to invest, you're going to want to set aside a set amount of money that you're going to invest every single week or every single month. Now, doing this is really important because there's something called compound interest. Now, compound interest is basically, all it means is that as you continue to invest, the numbers get bigger. And as you get a return on those bigger numbers, they continue to grow and snowball and snowball and snowball until you get to bigger numbers. Now, if you've never played around with the compound interest calculator, I would highly recommend it. As a compound interest calculator, you can just look it up on Google and it'll come right up. It shows you basically how the money accumulates and how the money builds up over time. It's probably one of the greatest tools you can use when you start first investing, because it shows you the power of an extra $100 a week or an extra $200 a week or whatever it is. And it shows you how much more that can make you and how stretched out, how far that can grow as time kind of plays its factor. So I think that's very important to note, and I would definitely advise looking over that. Now, a lot of people get started. Let's say you set up your brokerage, which I like Public and I like Webull. Those are two of my favorite brokerages. Robinhood is also very simple, although it does kind of it does have some weird sentiment towards it, but I think it's still a great option for investors who are just starting out. And so any of those three brokerages I think are great brokerages when you're first starting out. And once you set up your brokerage, the thing that a lot of people run into is that they're like, okay, I set it up. Now what? Now where do I invest? What companies do I buy? Because a lot of people see that, oh, you could just invest in the S&P 500, which are, if you don't know, you could buy something like an index fund, which is basically a bunch of companies piled into one stock that you buy, and then that stock tracks all those companies put together, and they're weighted and everything, so you don't have to worry about that. So the S&P 500, you would look up SPY, and that would get you the top 500 companies in the United States. Now, those top 500 companies have returned an average of about, I think it's 8% per year, or 8% over the past lifetime of the S&P. So it's obviously a great way to start, as you can get a decent return on your money, outpacing inflation and kind of just keeping your money growing over time. But if you are willing to do the work, now this is one of the most important things, because if you know who Warren Buffett is, one of the greatest investors of all time, what he always says over and over again is, if you're willing to do the work, if you're willing to research these companies and do all these things and spend time reviewing, looking over that company's products or whatever it is, if you're willing to do all those things, then yeah, go ahead and start investing in specific companies. Go and start investing in companies that you love and researching them and stuff. But if you're not, then yeah, go ahead and buy those top 500 companies. Just buy an ETF. Buy the index fund SPY, and you'll be able to get all the benefits of investing without having to do much work. But if you do want to see greater returns, if you do want to see your money grow faster and stuff, then you can go ahead and put in some work. You can go ahead and research companies. Now, how do you go about finding the companies that you want to research? Well, The best way to do that is look at people who you see that are doing well. Like look at someone like Warren Buffett. Look at any creators you might watch on YouTube. Look at the companies that these people are investing in, that they're doing well in, and then go ahead and look at the financials of those companies. Learn how to read financial statements. Learn how to look at the vision of companies. Read their 10Ks and 10Qs, which are basically forms that they disclose every quarter and every financial year in order to guide their investors. Start looking at all these things, and it'll allow you to open up your mind. It'll allow you to see, okay, what is a good company? What's a bad company? Is the stock price kind of justified for what the company is doing and how much the company is making? You'll start learning about cash flow, which is how much the company makes. You'll start learning about all these different things. And as you learn these different factors, you'll learn the difference between kind of dividend investing and growth investing and kind of just people who just speculate. And you'll learn the difference between all these different things. And it'll open up many different facets of investing for you that will allow you to build wealth long term. Now, each strategy is set for different people. Like dividend investing, a lot of people like because the company pays you out every quarter, every month, or whatever it is, and you accumulate that capital, you buy more shares of the same company, and it keeps going, keeps going, keeps going. Growth investing is more like, okay, this is a newer company or it's a growing company. You invest in it hoping that they do well over the next coming years. As they grow, they could lead to much higher returns than something like a dividend company, which are usually more established and long-term companies that have been around for a long time, like let's say Altria or AT&T, or any company like that. So I hope this gave you a nice kind of start and overview of how you can start investing. You just have to set up a brokerage, invest a set amount of money into the market every single week or every single month. Look at people who are doing well in the market and see the companies they're investing in, and don't just blindly buy those companies. Research those companies and start learning. If you don't want to go through all the hassle though, you could just invest a set amount into the S&P 500 every single week or every single month, and you'll do the average return of the market. So you can decide if that's what you want to do. Let me know in the comment section down below if you have any questions or if there's anything I missed in this video. Thank you so much for watching up to this point. Go ahead and smash the like button and subscribe.